Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up on the program today, Sudan's central bank devalues the currency to revive economy. And Kenya-UK trade pact allows British products get 25-year tax-free entry into Kenya. And Egypt's financial regulator sets EGX trading limit at 10,000 Egyptian pounds for under 21 youth. But first, the markets, major markets here in Africa were mostly positive at intraday, except South Africa's GSE, which declined 0.37%. On the flip side, Nigeria's main index reversed the bearish sentiment and was up 0.11%. The EGX 30 in Egypt jumped by 1%, and Kenya's market closed positive on Friday. And sentiment in Middle Eastern markets were mixed at intraday. Qatar's main index fell the most by 1.77%, while Saudi Arabia's market posted the highest gain on 0.16%. In the UAE, Dubai's index dropped by almost 1%, while the Abu Dhabi index rose 0.09%. And European stocks opened lower today amid the cautious trade in the global markets. Let's cross over to Frankfurt, where Astos Pandey is standing by to tell us more. Hello, Astos. Great to have you. German schools and daycares are beginning to open from today. What's the mood like?
Well, thanks for having me. Yes, there is a sense of relief among the parents, especially who've had to dabble between taking care of their kids and also working from home. But there is also a sense of confusion as to why the schools are opening now, especially given that on the weekend the cases of corona cases did go up, and the incidence rate is still above comfortable levels, above the 50 mark that the government actually is targeting, that is 50 infections per 100,000 people. So it's still above that, and that's the reason why there's a confusion. But the businesses are upbeat about the gradual easing of restrictions. The business confidence, according to a survey by EFO, the business confidence came in higher than expected, and that's because the businesses are looking forward to a time when the restrictions would be eased, and there have been strong response from the manufacturing sector, which has been performing really well. It's been booming because of demand from Asia predominantly.
And it seems many Germans, they seem to be reluctant to take the AstraZeneca shots. With only a fraction of the jabs delivered to Germany that have been administered, why are people wary of the vaccine?
Oh, it's so funny, isn't it? I mean, because just a few weeks back, Germany and other European countries were fighting with AstraZeneca for more supplies, and when the supplies are there are no takers for them. Just around 10% of the supplied vaccines, AstraZeneca vaccine in Germany, have been administered so far. That compares with 85% as far as BioNTech and Pfizer vaccine is concerned. So clearly people are wary. They are wary of its side effects. They are not confident enough about its efficacy. This despite the fact that authorities are at pains to explain to the people that, well, this is an effective vaccine. It does minimize severe illnesses and also hospital visits. So that is something that has not been drilled into people. They are still thinking that it is not effective enough. And these are healthcare workers who are predominantly reluctant at this point.
All right, let's look at commodity prices. They've been on a tear in recent months. Many experts say it's the beginning of a super cycle. What are the folks in Frankfurt saying?
Well, the jury is still out on this. There are people who are convinced that it is a super cycle. The prices are going up. They're citing how trillions of dollars will be spent on the green industrial revolution. The stimulus packages announced by the governments already have a green tinge to it. They are green heavy. They're focusing on green projects. So there are analysts who believe that the investment into these green projects is going to lead to a lot of demand for metals like copper, nickel, cobalt, aluminum, all these metals which are essentially used in future, will be used in future of mobility, the electric vehicles, then electricity distribution and generation. So there is a lot of buzz around these metals, and hence there is this forecast for super cycle. They are also bullish on metals because they feel that the dollar is weakening and there's going to be a rise in inflation, and metals, we know, are commodities per se, are a good hedge against inflation. But then there are others who say that perhaps these people are actually getting ahead of themselves in predicting a super cycle. It's too early to predict one because we are still in the midst of a pandemic. We are not over with this pandemic, and anything could go wrong with the vaccination drives across the world, and also the fact that China's growth, the momentum is not going to last perpetually, and they feel that perhaps in the near year or so, or the next year, in fact, this major growth spurt that China witnessed is going to calm down.
Anyway, we'll keep tracking that market. Thanks for the updates, Ashutosh, and do enjoy the rest of your day.
Thank you.
An hour into the week's trading, UK stocks were not having a great time. The FTSE 100's blue chips were down at about 6,560 points, while the mid-cap FTSE 250 also went down to 20,836 points. For intraday update, let's cross over to Juliana now. Hello, Juliana. Great to have you. And looks like stocks took a back foot this morning. Has that changed this intraday? And was it as a result of expectations of more details of the plans to ease restrictions on the UK economy?
Yeah, you're absolutely right, Laddie. The FTSE is in the red at intraday, and it is because of this leaked lockdown plan. I've got to tell you, here in the UK, there is only one story that everybody is talking about, and it is about Prime Minister Boris Johnson's address. We're expecting that at 3:30 local time, followed by a televised address to the nation at about 7 o'clock. And the reason why the FTSE is in the red is because a lot of the stocks that have been doing well during the lockdown, shareholders are running away from them, and that includes Just Eat and Ocado. Their shares are down between about 3 to 4%. We do have some big risers, and they're the likes of Cineworld and TUI and EasyJet. But the fact that these big giants are weighing down the FTSE wasn't enough to keep it in positive territory at intraday. The FTSE All Share is down 0.74%. The FTSE 100 is down by 0.72%, and the FTSE 250 is down by 0.85%. In the currencies market, the British pound is still up on the US dollar by 0.06%, up on the euro by 0.01%, and up on the Japanese yen by 0.30%.
Yeah, I see the pound is still doing good there. And British Airways has struck a deal to delay £450 million of pension deficit contributions as the company struggles to go through COVID travel restrictions. What's the extent of this extension, and what would it mean for the airline?
Well, for the airline, it means it can stay afloat a little bit longer. That's why their shares, or the shares of the parent company, IAG, were up about 1% after they released this annual statement, basically saying that they would have to defer payments that they would typically make every single month to the New Airways pension scheme for £37.5 million every month. They can rest assured now, because they've secured a deal to not have to pay that for a while. It will be deferred for about a year, and these payments were to typically come out between October 2020 to September 2021. On top of that, they've also confirmed, BA, that they will not be paying out any dividends until at least the end of 2023. And that's obviously because they need to get themselves through this crippling battle that the airlines have been facing across the globe, particularly here in the UK. A lot of airline bosses feel that they've had it much worse, especially because we've got this new quarantine measure that came into effect last week, Monday. So now passengers that are coming from a list of 33 countries will have to pay £2,000 on top of their ticket to quarantine in a hotel for 11 nights. A lot of them wrote to the Prime Minister on the weekend asking for restrictions to be lifted as soon as possible so the summer season can kick in. And this is why BA have decided to defer these pension payouts as well as dividends so they can, weather the storm for a little bit longer.
And of course, pubs and restaurants have continued to take a hit from the COVID-19 lockdown. Mitchells and Butlers has temporarily suspended payments to its staff pension fund and is pressing ahead with a £350 million emergency fundraising. What more can you tell us about this story?
Yeah, well, Mitchells and Butler are really popular. They own a really popular chain of different restaurants and bars up and down the country. Our British viewers will definitely be aware of All Bar One, Toby Carvery and Harvester. Like, you know, many of their competitors in the hospitality sector, they've had a really rough ride. The money that they've been given by the Treasury just hasn't been enough. They announced that in January, they literally only had about £116 million in the bank, and they have had to have been paying out between £30 and £35 million a month, just completely unaffordable for them. So today they've put out some sort of stake saying that they need to raise £351 million from investors. From the research I've done on this story, their four largest shareholders did say they are going to bail them out of this £351 million. But again, you know, this is M&B are just one of many, many tens of thousands of hospitality sector businesses who are reeling from this third national lockdown. And even though, of course, you know, we've got fingers crossed and all eyes will be watching Boris Johnson in a couple of hours' time, we're not expecting hospitality to be open anytime soon.
All right, Juliana, thanks for the update. Do enjoy the rest of your day.
Thank you.
And stocks in Asia Pacific mostly declined today as China left its benchmark lending rate unchanged over the weekend. Mainland Chinese stocks led losses among the region's major markets as they closed lower, with the Shenzhen Company down 3.072% to 15,336. And Shenzhen Composite 1.5% lower at 3,642. Hong Kong's Hang Seng Index declined 0.89% as of its final hour of trading, while South Korea's Kospi closed 0.9% lower at 3,079. In Japan, the Nikkei 225 bucked the overall trend as it rose 0.46% to close at 30,156, while the Topix Index ended its trading day 0.49% higher at 1,938. Meanwhile, the S&P ASX 200 in Australia finished its trading day 0.19% lower at 6,780. MSCI's broadest index of Asia-Pacific shares outside Japan was 0.96% lower. And stock futures declined in early morning trade today after the S&P 500 posted its first losing week. And futures on the Dow Jones Industrial Average dropped 160 points. S&P 500 futures and NASDAQ 100 futures also traded in negative territory. Moving the futures came after the S&P 500 and the NASDAQ Composite snapped a two-week winning streak with a loss of 0.7% and 1.6% respectively last week, while the blue chip Dow eked out a 0.1% gain in the same period. Some equity investors grew concerned about rapidly rising bond yields in recent weeks, as they could especially hurt high-growth companies reliant on easy borrowing, while diminishing the relative appeal of stocks. And oil prices rose earlier today as the slow return of U.S. crude output that was caught by the frigid conditions raised concerns about supply, just as demand is coming back from the depths of the coronavirus pandemic. Brent crude was up 1.2% at $61.67 a barrel, while U.S. oil rose 1.3% to $59.98 a barrel, having fallen 0.4% last week. Abnormally cold weather in Texas and the Plains states forced a shutdown of up to 4 million barrels per day of crude production, along with 21 billion cubic feet of natural gas output. For the first time since November, U.S. drilling companies cut the number of oil rigs operating due to the cold and snow enveloping Texas, New Mexico, and other energy-producing centers. And gold prices edge higher in early trade to recover from an over 7-month low touched in the previous session as the dollar weakened. Although higher U.S. Treasury yields capped bullion gains, Spot gold rose 0.3% to $1,787 per ounce, while U.S. gold futures gained 0.4% to $1,784. The dollar eased against rivals, making gold affordable for holders of other currencies. Among other precious metals, silver gained 1.3% to $27.56 an ounce. Platinum rose 1.7% to $1,295, while palladium climbed 1.6% to $2,415. We'll take a break now. We'll bring you more stories across the African continent. Do stay with us. Watching Business Incorporated, South African Finance Minister Tito Mboweni will have to show commitment to curb spending and reining debt in this week's budget, while finding ways to revive an economy that probably contracted the most in 9 decades last year. Mboweni will present the government's spending framework for the next 3 years on Wednesday after the coronavirus pandemic ravaged Africa's most industrialized economy, increasing the strain on already stretched public finances and even forcing the ruling African National Congress to end its long-held resistance to borrowing from the International Monetary Fund. Matt Kindiger, an associate practice lead at Frontier View, joins us now to outline what to expect from the budget and what it will mean for economic outlook and businesses in the country. Hello, Matt. Thank you for joining us.
Hello. Thank you for having me on the program today.
Yeah. So how will the recent fiscal trends shape the budget speech this week?
So it's probably worth looking back a little bit to see how bad things were last year. So the government did face significant increases in fiscal pressures last year as a result of a substantial drop in tax revenues, while at the same time it rolled out a 500 billion rand stimulus, which was the largest ever on record. And so this contributed to an estimated budget deficit of around about 15% of GDP, which is really quite significant. But I would say over the last 3 to 6 months, there has been some good news. So there has been an increase in global commodity prices, which has resulted in a revenue windfall for the South African government. And there was also a decline in the cost of borrowing for the government in 2020. So both these factors will offer some relief for the government. And this does mean that we are expecting the budget speech to include less immediate tax increases, less immediate spending cuts, so slightly less aggressive pace of consolidation over the next 6 months or so.
Okay, so how are businesses in South Africa likely to be affected by developments in the budget speech?
So there are a couple of things to bear in mind. One is the short-term sentiment aspect. So the moderately upbeat tone in the budget speech will probably support short-term sentiment, investor sentiment, portfolio inflows into South Africa. And we are expecting to see less rand volatility than we previously were forecasting for 2021. So this is probably a good thing. But for businesses, crucially, we are unlikely to see significant tax rises for 2021 yet, but these can't be ruled out later on in the year. For example, income taxes as well are unlikely to rise significantly in the budget speech, but again, probably later in 2021, we can expect them to rise. Sectors that are exposed to government spending as well, they were bracing themselves for much weaker public sector demand, but actually we probably won't see as a stronger consolidation. So public sector demand will probably be a bit more resilient than previously forecast.
What is the longer-term outlook for South Africa's public finances, and how will this influence government spending and investment plans in the coming years?
Yes, so the positive developments of the last 3 to 6 months are really quite short-term, and in a way, they will be delaying the inevitable, which is the need for quite substantial consolidation. So that means longer-term trends of much weaker government spending increases every year, and also much weaker investment in infrastructure projects, for example. So the government's fiscal capacity to stimulate the economy, to increase spending will be very limited. We also have this problem of a chronic problem of highly indebted and very inefficient state-owned enterprises. For example, Eskom, although it is turning a corner, the energy utility, we do expect the Eskom to require significant additional government support over the coming years. And so this again will restrict the government's ability to fund other areas of government spending. So although the next 6 months are probably not going to look terrible, the next couple of years slightly less optimistic in terms of the government's finances in South Africa.
All right, I guess we'll get the outcome of the speech by Wednesday. All right, Matt, thank you so much for your time.
Thank you.
And Sudan's central bank steeply devalued the country's currency as part of a broader effort to win debt relief and revive the struggling economy. Although the central bank has yet to announce the new official rate for what it said will be a flexible managed float, Bank of Khartoum, the country's largest lender, said on its website that the new rate is £375 per dollar, compared with the previous official rate of £55. The move was demanded by international lenders, but threatens to pile on more hardship in a country whose inflation rate topped 300% in January. Currency liberalization is a key component of the economic reforms planned by Sudan's military and civilian rulers, who began transitioning the African nation to democracy after decades of authoritarian rule. The central bank has instructed banks and exchange bureaus to adopt the new system immediately. And Kenya's trade pact with the UK will allow British firms to ship in goods duty-free for 25 years. The post-Brexit trade deal with the UK will, however, open the window for British companies to flood the local market with finished and unfinished goods that exclude agricultural and industrial products at the expiry of a 7-year moratorium. The details of the trade agreement were revealed by the Ministry of Industrialization, Trade and Enterprise. A development as it asked Parliament to ratify the Economic Partnership Agreement signed between Kenya and the United Kingdom of Great Britain and Northern Ireland. Nairobi signed a post-Brexit trade deal with the UK on December the 8th, preserving duty and quota-free access of exports after London formally exited the European Union on December the 31st, 2020. An Egypt Financial Regulatory Authority has set a trading limit of 10,000 Egyptian pounds on the Egyptian exchange for those between 16 and 21 years of age. The limit was issued under Executive Decision number 23 for 2021, following approval from its board of directors to set the maximum limit for this age group. The decision also limits dealings for this age segment to selling and buying, while margin trading and short selling will not be allowed. The FRA chairperson, Mohammed Omran, says the maximum limit came in light of the statistics presented by the authority's competent departments that show there are about 383,000 coded dealers who own shares in the EGX-listed companies. And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.